You're listening to Criticaleye's Inspiring Leaders podcast. Criticaleye is a global membership community with over 2 decades of experience supporting senior executives in their roles. We work with board-level executives, giving them opportunities to build their knowledge, skills, and access independent reference points outside of their immediate networks. Whether you're stepping up into a more senior role or aspiring to do so, looking to hone high-level stakeholder relationships, drive operational performance, build your own personal resilience as a leader, or have longer-term career goals such as moving into a plural career, Criticaleye's approach supports a range of leadership challenges and ambitions.
Hello and welcome to Criticaleye's Inspiring Leaders podcast. My name is Jacob Ambrose Willson, Senior Editor at Criticaleye, and I'm delighted to be hosting this episode where we'll be looking at how growth companies can unlock value on the capital markets in what remains, a really challenging environment for leaders to be working within. So I'm delighted to have with me for this one, Dave Willson, currently chair of two London-listed firms. Firstly, legal and professional services business Knights, and also the digital publisher LBG Media. So with over 30 years of exec and non-exec experience growing businesses, Dave is extremely well qualified, I think, to speak on how leaders can deliver value on the public markets, and of course on London's AIM in particular. So Dave, welcome to the pod. How are you doing today?
Thank you. I'm doing very well, thank you. And thank you for hosting me. Too many thanks there, but anyway.
Not a problem. But look, you've got so much experience when it comes to scaling businesses, IPOs, acquisitions, organic growth, all areas where you've kind of been there, done that, and got the t-shirt, if you will. So yeah, maybe set the scene in terms of your exec career first, and yeah, maybe just expand on the intro I gave, if you feel.
Yeah, thank you for that. And obviously through, I think it's about 35 more years in the TMT space mainly. The earlier days, if I pick up on the growth position, did a management buyout that then eventually trade sold to ICL Fujitsu, and in that it was called Technology PLC, grew it from 250 million to 750 million revenue over 4 years. Then I moved on to another PE-backed business, which was Codemasters, which is a gaming software business, and grew that from 25 to 75 million. And then came back up. They were both in the south of the country, and they came back north to startup, which was envirophone.com, recycling your mobile phone for cash. And that was PE backed, and that was a 3 million growth up to 34 million in 3 years. It just rocketed through TV advertising. But all of those were private equity, privately owned businesses. Then I moved on to the listed environment. I got my, I guess you can say, lucky break back in 2009 for a business called GB Group, which is probably my claim to fame more than anything else. And that it did software to identify fraud and anti-money laundering and location services, and grew the business from a market cap of over 13 years. This was from 14 million to 1.8 billion. Made a little bit of money on the route there, but that was a dual organic growth. We grew about 25% per annum, half of it M&A, merger and acquisition, of which I did 13 of them and sold 2 businesses, and grew from 1 country out to 16 countries globally. Revenues from 20 million up to 220, and staff from 100 to just over 1,000. So a really fantastic journey in that. Then I took semi-retirement, I guess you talk about it. Don't like mention the R word. And I took up the non-exec chair role at LBG Media, which is known as LADbible or Betches in the US. And I'd known Solly and Ariane, the 2 founders, from many, many years ago, and I helped mentor them in 2018 when we bought Unilad. So Solly wanted to IPO, and that happened in November 21. And since then, grown the business revenue wise 17% and profit wise 29% up to last year. And then I took up another non-exec appointment in November 23, and that's with Knights, the legal services. And since then, we've grown the business 22%. So good experiences in growth and business. Not so great experiences in market valuations, but I guess that's probably one of the questions you're likely to come on to.
Absolutely. We'll be getting into that shortly, but I suppose just to go back to LADbible Group, and obviously you joined the business as chair around the time that they were looking to IPO onto London's AIM. What role did you play in, I suppose, preparing the leadership team? You mentioned knowing the guys beforehand. Obviously, it's a big, momentous occasion, but also high pressure.
Yeah, a lot of the background work on those are done by the advisors and the reporting accountants and the internal teams. So the whole team, the teams are 6 to 9 months full on, with all of the regulatory requirements. So the key things really is help recruit the PLC board. So we had to have the right people on as non-execs to add value to the business rather than just from a governance perspective. Helped with the investor presentations. At IPO, I probably did about 5 or 6 of the presentations myself because I'd just come out of exec roles out and I knew all of the investors, and it helped to get some of the investors on board with the IPO. A couple of points were fundamental rules are you never miss your numbers on the public markets. Fortunately, LADbible did in its first year, but trying to say, don't miss your numbers here. So Tim, the CFO, had too high margins, operating margins in the business, or EBITDA margins, and we missed on that. And also have sufficient cash, for further growth capability, whether it's investing in people or investing in, M&A. So they were and just regularly giving feedback on outside in view of what they're saying in the presentations and how they come across. Because you can't really be seen too much as a sales organization. You have to be seen as a business organization and the investors need to know, is the market big and growing? Is the company differentiated enough? I know there's people sat in front of them going to deliver on, what they say they are. So just basic things like that, just constantly reminding.
Yeah, yeah. And look, over the last 4 years, how would you say the companies has sort of fared on the public markets? I know you alluded earlier to valuations being a bit of a challenge, and I suppose the market is now very different to 2021.
Yeah. So in business terms, the business in LADbible or LBG has grown, 17% revenue and 29%, so compound. So the business has performed well. Yeah. The business has grown more into its dealing direct with brands and reduced its reliance on Facebook. So we did what we said we'd do at the IPO. The valuation hasn't, with that first miss that we had, valuation's gone from 360 million down to 200 million and has not recovered. So that is one where I think that the UK markets, particularly for the smaller cap business, I'm talking about probably under 400 million market cap levels, just gets hit harder, one short-term period of missing performance, rather than missing growth. It's still growing, but just missed performance. So
Yeah. So you think it's a wider issue in the UK sort of capital market system? I mean, it's something that's flagged a lot in terms of liquidity problems and outflows from the system. Is that concerning to you?
It is because if you take a bit of the backdrop, the outflows of the market. I got some numbers a few months ago saying, I think in 3.5 years, the only inflow that we had in the market was in November 24. So money's going out the markets. The amount of UK equity allocations from pensions and institutions, organisations have moved those into US and other higher growth markets. So as a consequence of that, the UK market currently has low valuations and low liquidity. And a lot of owners and entrepreneurs are, actively pursuing a bit of time off the market on public to privates, because private equity is sitting on, about £4 billion worth of funds to effect that. So the market is, we've discussed this with advisors on both boards, is we think the market's just dysfunctional at the moment, really is. The only green shoots I think that we've seen recently is, give him his due, Donald Trump risked up the US market, so he spooked the US market, so a lot of the funds moved out of the US market into Europe. This is back in April, and some of the funds are finding their way into the UK markets, as well as money coming back into the UK markets from public to private. So PE are buying the business, the money's going back in institutions and they're reinvesting it.
Yeah.
Lots of tax advantages for IHT funds. So there's a bit of, because of low valuations and some money flowing back in, but not recognised yet into the UK markets. There's some sign of recovery.
Yeah. And the government here in the UK is trying to redirect some of the sort of pension capital back into UK markets. I mean, you see maybe some of that policy coming out of the recent budget. Do you think that can be impactful, or do you have any view on, I suppose, government policy to kind of redirect that investment back into UK stocks?
I think that the redirection is minuscule at the moment.
Hmm.
And I think that the way that the organisations that are talking to the government are trying to influence is on, UK pension funds. Why is only circa 9% of them invested in UK equities? Why shouldn't the pension funds be, at least half of it or even more back in UK equities? The only challenge that comes back are, there's 24,000 pension providers, in the UK. So you're always going to get some backlash of doing that. But if you want to grow the UK, get some rules in place or tax advantages to put some money back into the UK. And also the reduction on inheritance tax relief. That was a big reason for, people holding their pensions in the UK. So they get tax relief on it. They've got to hold it for 2 years or more. Well, that's been halved. So there's a lot more that can be done, assuming the government can cope with any backlash of it, because there'll always be something like that to incentivize more investment in UK business, public and private.
Yeah. So look, with that in mind, a lot of challenges facing leadership teams of PLCs at the moment. How are you supporting the teams that you work with at the likes of LADbibles and Knights?
I'll probably try and put it into a couple of simple. I'm very simple individual, so I'd say it's situational support based on my experience. So the people in the CEOs of the businesses know the markets, know how to run the businesses. Yeah. And they'll come across areas where they've just not been exposed to or want some help or experience on. So in every situation, I've somewhere in the past, I've come across something similar to it. Yeah. So I'd say that's point one. On the macro side of the environment, just making certain as a couple of businesses that we respond, first of all, recognize what's happening and respond as quickly as possible. So certain times, like, you know, when Trump did his announcements on tariffs in April, it was like, oh, well, how's that going to reflect? But if we didn't respond quickly, like on the social media side to it, we would have been in a much worse position as a consequence. So it's seeing what's happening, recognizing it, recognize the impact, but then adapting very quickly. The quicker you adapt, the better the performance is.
Yeah.
Yeah.
Would you say that, you know, in particular, key players on the exec teams that you work with, you know, the CEO, the CFO, for example, have they struggled with the pace of the operating environment at the moment? It's, you know, things are happening at a lot faster rate than what they used to, I would posit.
I don't think either, because they're both very, very good entrepreneurs, but both the CEOs of it. They don't struggle with the pace. It's effectively as you're growing a business, when the complexities added in with increased headcount. So when you move to like 100 people organization, then to 500, then to 1,000, that's when complexities added in with different structures. So I think news is really widely communicated and received by all parties, and we discuss, you know, those regularly on one-to-ones with them. Also, what we do in both, it's probably quite unusual in both board meetings, is we have the first 2 hours of the board meeting covering strategic issues or strategic plans. So we talk about big points at the start of the board meeting, openly discussing them, execs getting value from the non-execs and vice versa based on the advice. So really, really open discussion. So if there's something troubling, you know, the exec team and the pace things are moving on, we can sound it out based on the experience. If we haven't got the experience in the room or on calls, there's somebody that knows somebody that does have the experience.
Yeah. And one area that we haven't covered yet, which I think is important, is you know, investors as a key stakeholder group. Now we often hear that regular reporting to the markets and engaging with those key shareholders can lead to short-termism in terms of the thinking amongst PLC leaders. Do you agree with that? I know you have the PE sort of angle as well. You can use that maybe to compare and contrast.
So I would say that on the public markets, sorry, just reverse a bit. On the private equity market, there's generally a distinct exit time horizon, you know, between 3 and 5 years. So if things in the organization need improving or heavily investing or correcting, you've got the first 2 years to do that. Yeah. On the public market, you cannot miss a number. Yeah. So the short-termism comes back from, if you set the expectations really low, yeah, you get a lower valuation, but therefore you don't miss them. Yeah. So in GB Group on that, we had access to capital, and, you know, didn't miss the number over the 13 years there, and our share price rocketed up, and therefore access to capital easier. So the constraints on growth are resource constraints, access to people, high quality, and cash constraints. Yeah. So having the long-term strategy that you deploy short-term, I think every business has to do. Yeah. But it's then how you set the expectations on the current year and next year on the public markets is really important. And then if you miss a number, it's unforgiving for 1 or 2 years. Actually, probably more than that, 2 to 3 years. So the short-termism is you can't miss your current market number, but if your long-term numbers are right and your long-term strategy is right, you bring it down to the short-term deployment. Yeah.
In terms of the long-term strategy and communicating that to shareholders, what's the best practice for doing that, and how are you supporting, the current teams that you work with in terms of that, I suppose, storyboarding?
Yeah, in a lot of senses, it's re-emphasizing why the business is different, why the current target market it's approaching is what it is, and how the business is going to deploy itself in that, how that market's going to change, and how the business can react to it, but do that in a really simple, understandable manner. That what the institutional investors do, they tend to look at a 3-year time horizon based on the analyst numbers, and then they do a discounted cash flow for another 7 years, and then they discount that back for evaluation. So what they try and do is look at the long-term market, see what the analysts are saying short-term, and then see how that is figures out in terms of valuation and the ability for the management team to deploy. So it's trying to get all of those points, the 3 simple points: big market, growing market, differentiation, can the team execute consistently over in a manner that the investors understand. So LADbible is a challenging one because most of the investors, like myself, are boomers, if that still exists. Most of the people in LADbible are the older ones are millennials, the young ones are Gen Z, the average age is 25. So trying to explain that to institutional investors that are not on social media is extremely challenging. They need to refer to their own children.
Yeah.
Get feedback on it. Have you heard about them? So that part is really difficult, getting over the complexity in a simplified manner. It takes 2 or 3 sessions before I get that type response, and then follow-on questions come in place. On the legal services side, the exposure on that is really in London, where a lot of the institutional investors are. They're exposed to the top 10 legal services firm in London, and Knights are the largest legal services firm outside of London. So they're not really exposed to local services provided by outside of London legal firms. So it's trying to put it in a manner that the institutional investors fully understand and can get how the business can grow and is in good hands.
Yeah. And I suppose getting the right balance of, growth, profitability, not missing your numbers, balance sheet strength, that's all sort of, key to investors when you're presenting to them. So I suppose, how are you advising execs when it comes to, maybe, for example, bringing a piece of M&A to the table, and working that through with them?
Yeah, well, I think that on the M&A side, I've done so many of them now, and like on GB Group did 13. The added value that I bring back to the exec team are make certain you do a proper strategy integration. So in other words, what is the business going to be doing post completion? Yeah, and how's it fit in the organization? How are we going to manage it, etc. Then the key things that a lot of the M&A side fail on is culture.
Yeah.
And when LADbible bought Betches, we spent a week over in New York with them, and they spent a week over in Manchester and London with LADbible, just to see if everyone fits and could work together on that. The final one is deploying a bit of the learnings I had on the private equity environments, like always working to your cash flows and your internal rates of return, because what the private equity always look at is a 25% internal rate of return, And what that effectively means is, are your profits and cash going to grow by 25%, for the next 3 to 5 years? So they're the things I type of add to it, and then just see what's missing from it, and then a detailed integration plan. So, the Knights business, last year bought 4 legal firms, so it knows how to do it. LADbible has bought 2 so far, and we'll be buying 1 or 2 a year going forward.
Yeah, yeah. Is there more scrutiny on deals at present, given, I suppose, the macro, more due diligence, I suppose, to prevent failures?
I don't think that's changed, to be honest. I think what has changed, if you take both of the businesses I look after, the founders still own a substantial amount of the equity.
Hmm.
So they will not want to raise equity until the share price is above an area where they won't get heavily diluted. So it's more a share price dynamic that is slowing down secondary raises. There's enough businesses for UK equities to buy outside of the UK, including the US, Asia Pacific, and Europe. It's just access to capital on current low valuations, make them think, well, I should use debt. And then the old adage then in the UK markets is fund managers don't tend to like anything more than 2 times EBITDA, whereas in the US they're more times 4 times EBITDA. It's just the dynamics are more positive and aggressive in the US. Therefore, it's more challenging to raise capital, secondary capital in the UK.
Yeah, yeah, makes sense. Look, clearly the environment is, very complex for growth businesses at the moment. The funding landscape is difficult, as we've been discussing. I wanted to ask how important you think strong peer networks are for leaders at the moment in terms of having support networks, be it professionally or also personally, and from your perspective as a chair, I think it's interesting.
Well, I think the key thing is that being a CEO is a very lonely job. So I think peer networks and advisors are essential. There's no other way of saying it, really. I think some of the nervousness that the CEOs have would be how to make use of it, because they'll think of from a business opportunity perspective, rather than them able to learn from experiences of other people in the network or see active advice from the challenges they're currently facing. And sometimes somebody in their own network would have experienced the same difficulties that the execs, the C-level suite are going through themselves. Fortunately, I had 5 to 6 years of an exec business coach, so I had that one-on-one every quarter, and so I had that regularly through. So I'd say, it's not only important, it's essential, because it is, any C-suite is lonely in its own right, but the C-level tend to lean on the CEO or the chair or other people more than they lead on people in external networks. So, you're learning from other people's experiences.
Yeah, yeah, definitely. Okay, so maybe last question, Dave. And it's a broader one, I suppose. What would your advice be to leadership teams of publicly listed businesses in particular at the moment, aiming to, deliver growth and value to investors in what is, a very difficult market?
Yeah, it'd be probably a few things. Keep the head down, grow the business. Hopefully, the market will catch up. That's the flip and response. Yeah.
Hmm.
Look at public to private transaction, depending on what they want in an exec team, because they can probably yield more value on a 3-year time horizon, assuming it's a good business, because the PE, are looking at lots of businesses, so they're not the only, trip in town. And then if they want to stay on the market, then in the UK, look to presenting to different types of investors, institutional investors, wealth managers or private client, and private investors. That's in the UK. There's different ways of approaching those types of investors. European investors, great investors in Germany, France, Northern Europe, with lots of money that they want to deploy. And then in the US, on the New York side and Chicago, there's 3 or 4 funds that will invest in micro cap, they call it. So, $500 million type market cap organizations. So probably summing that up to approaching the types of investors that could invest in you the right way. Consider public to private if you want to yield a lot of value in 3 year. Apart from that, keep your head down and deliver results, and the market will catch up.
Yeah, well, I think that's a good place to wrap up this episode. Thank you, Dave, for your, excellent insights throughout this conversation on unlocking value on the capital markets. Thank you to our listeners for tuning in. If you like this one, you can listen to more episodes from our Inspiring Leaders podcast on Spotify and all the other usual places you get your podcasts. But that is all for this one. Thank you again, and see you next time.